What's up, YouTube? Welcome back to Not Dumb Money. In today's video, I'll talk about Disney. I asked you on Instagram whether you wanted to hear me talk about Disney or Facebook. You guys chose Disney, and that's great because I really wanted to talk about Disney. There's no denying it. Disney's been hammered by the pandemic operationally, but their stock hit an all-time high recently. So what's going on? What is happening at Disney, and what does their future look like? Well, I'll tell you what I think. I bought Disney stock back in 2014 and I have continued to hold it ever since. My investment thesis has changed a little, but the main reason for why I bought Disney over 6 years ago is still valid today. I'll explain why I bought the stock. I'll explain why I continue to hold the stock. I'll also tell you what my current target price is. But first, if you're not a subscriber, please subscribe. Do it. This channel really needs your support, and it would mean a lot to me if I can spend more time making videos like this for you guys. When you follow, it tells me that you want more. If you're already a subscriber, yeah, you know what's up. All right then. So, Disney. The stock is up almost 20% year to date. But, and this is a big but, the positive gain really only happened over the past month. While the stock is up about 20% this year, it's actually up around 22% over the past 30 days. In fact, Disney stock was negative for the year between February 4th and November 16th. I mean, it's no surprise, really, for many people when they think Disney, they think Disneyland or Disney World. And Disney parks have been hit hard by the pandemic. Shanghai Disneyland and Hong Kong Disneyland closed down in January. Disney World Orlando, Disneyland Anaheim, Disneyland Paris, and Disney Cruise Line all closed down mid-March. Some parks have reopened since, but some have also closed down again. Shanghai Disneyland reopened in May. Hong Kong Disneyland reopened in June, closed down again in July, and reopened again in September. Disney World Orlando and Disneyland Paris reopened in July, only for Disneyland Paris to close down again in October. Disneyland Anaheim is still closed. I mean, when Disney reported its latest financial results on November 12th, their revenue was down 6% for the year, and adjusted earnings were down a staggering 65%. Massive job cuts took place. A total of 32,000 layoffs were announced. Another 37,000 employees were placed on furlough. Disney's radio networks were shut down after 24 years on the air. So what is going on? Why is Disney stock up this year? Why has it grown so much in just 1 month? Well, for one, their parks and film entertainment division should start to recover slowly as more parks reopen and attendance restrictions ease. When news of a vaccine broke last month, Disney's stock jumped 12% the next day. Disney's core media networks business is also showing signs of recovery with the return of live sport events and other programming. But the real reason for why the stock has done so well lately is Plus. Disney Plus. In October, Disney announced a major reorganization and said streaming will be its primary focus. In November, they announced that Disney Plus reached 74 million paid subscribers. Getting that many paid subscribers in less than a year is super impressive. And earlier this month, Disney Plus's paid subscribers reached 86.8 million. This is on top of the 38.8 million Hulu subscribers and 11.5 million ESPN Plus subscribers. Disney Plus is now targeting between 230 million and 260 million paid subscribers by 2024. And boy, are they investing in content. On Investor Day, Disney announced over 100 movies and shows connected to Star Wars, Marvel, FX, and National Geographic. Disney Plus will be getting shows like Obi-Wan Kenobi starring Ewan McGregor and Hayden Christensen. They announced a bunch of other Star Wars shows too. There's Rangers of the New Republic, Ahsoka, Andor, Star Wars The Bad Batch, Star Wars Visions, Lando, The Acolyte, and A Droid Story. There's a bunch of new Marvel shows too. Secret Invasion, Ironheart, Armor Wars, WandaVision, The Falcon and the Winter Soldier, and Loki. Oh, but wait! There's more. We're also getting Miss Marvel, Hawkeye, She-Hulk, Guardians of the Galaxy Holiday Special, and I Am Groot. They announced so many more shows and films, but I'm a Star Wars and Marvel fan, so that's why I chose the ones I listed. So, it's pretty obvious now, but I'll say it anyways. Disney Plus is the reason Disney stock is up this year. But I'm not bullish about Disney just because of Disney Plus. When I first invested in Disney, Disney Plus didn't exist. I invested in Disney because I believe that, above all else, Disney is a content company. Their content is almost a century in the making and, in my opinion, cannot be matched by any other company today. With Disney, Marvel, Star Wars, FX, and more, they are sitting on content gold. Whether we talk about parks, experiences, shows, films, or toys, it's all about the content they have and about the content they will make. With Disney Plus, they now have the ultimate platform to monetize their content. Their parks and entertainment and studio businesses will recover. The parks and cruises will get packed again. Kids will continue to spend money on Disney, Marvel, and Star Wars toys. Cinemas will reopen and they will have more blockbusters. But Disney Plus is their golden goose. And I'm not alone in thinking this. Goldman Sachs, Bank of America Securities, Loop Capital, Barclays, and JP Morgan all have increased their target prices for Disney. My target price for Disney right now is $220. This is based on a combination of peer multiples and a discounted cash flow valuation. The final point I want to address is their current financial strength and stability. They took on about $9 billion of additional debt this year to boost liquidity, bringing their total debt pile to $58.6 billion. Of this, $5.7 billion is current and needs to be repaid within a year. But they have almost $18 billion in cash. They suspended their semi-annual dividend for July 2020 and January 2021. And Disney also closed on a $5 billion revolving facility in April. So I'm not worried about their financial stability, and I think they have cash and will generate more cash to manage their debt. And I'm done. I hope you found this interesting, and if you got this far, thank you so much for watching. What are your thoughts on Disney? What do you think of Disney Plus? Are you bullish or bearish? Please let me know in the comments. And if you like this video, please do me a huge favor and hit that like button and subscribe. Your support means a lot and it really helps me out. Okay? As always, it's been a pleasure. Much love. Peace.